we're good with that. So everybody, hey, you have my deepest and sincerest apologies to you, but we're good now. So here you go. This is what we were trying to do. Show you. It's from Morningstar. Link in the description below. The best dividend funds. Boy, that puts a dour on it, but we're just going to steam straight ahead, full speed ahead. Damn the torpedoes, right? So this is from Morningstar, and we'll just sum this up really quick. You can read it. They show their pick for 19 dividend stocks. They give a little bit of blurb here, but they say it's their mutual funds and ETFs that are focused on U.S. dividend stocks and had at least one share class that earned one of their top medalist ratings of silver or gold and have 100% analyst coverage as of December 4th. So this is what Morningstar thinks are going to be the best going forward. So I took this number right here, these 19, and we put it into this spreadsheet, which there's also a link in. I guess I don't have to do that. There's a bad habits die hard. There's a link in the description below. I still can't believe that happened. My God. Hey, nice recovery though, right? When life gets you down, one of the surefire ways to lose is to stay down. We got knocked down. We got right back up at that mofo, and here we are. Look it all turned out okay. So what I did here is I put all of these 19, put the fund name, gave you the inception date, gave you their expense ratios. The ones in these that are bolded are the number one, the top performer of that position. So for example, for yield, if we sort that out, we'll see that SCHD, surprise, surprise, had the top yield. So, but pretty close second, but was FDVV, the Fidelity VV, the Fidelity High Dividend ETF, which came out in 2016. So you can take a peek at this. We're not going to stay on this too long. It's kind of self-explanatory, but wanted to show you that SCHD had a three-way tie for expense ratio. Let me do it the other way here. Go A to Z. So 0.06 was SCHD, and then VYM and VIG, also two popular ETFs. Then there's a couple Vanguards after it with 0.08. So really, really low expense ratio. That's something you really want to look for because those expenses add up year after year, and those expenses compound as well. But we also had here the, oh, for crying out, look at this. I didn't lock the, could this get any worse? I didn't lock this green bar up here. So we, let's see, we'll do that. We'll freeze that. So there we go. That's what we needed to do to not have that jump around. I was like, where's the green bar? The header. So anyway, but the short of it is, yeah, from what I can tell, we go to the 5-year dividend growth. Some of them haven't been around long enough, like the VHYAX. And remember, when you see X on the end of anything, it's a mutual fund. So that's what those are. And the rest should be ETFs. And you can see they do say ETF on there. But SCHD had the highest 5-year dividend growth rate out of them all. And again, you know, the 1-year performance, obviously, a lot of the value, large cap value stocks like SCHD, things of that nature haven't done that well. And then also off to the right, well, there, look, 10-year performance. The best one is the PRDGX, the T. Rowe Price Dividend Growth Fund, no load, which is the fees, no, the load, whether there's load or no load. Not Metallica's album, but SCHD was number 2 in the 10-year performance, tied with VDIGX. So yeah, just pretty cool. And then I got for you the number 1, 2, and 3 sectors. And then also, I didn't tell you, if you hover over this, it will take you to, and you click, it'll take you to the Seeking Alpha summary page, which you guys, if you went on incognito, I checked it out, you'll still be able to see what they have here, but very valuable. If you scroll down, if you didn't know, you can see here, this is where I pulled the returns from, the 1, 3, 5, 10-year total return. Remember, that's all distributions, everything received, the expense ratio right there, some stats, but it's pretty cool. They have the holdings breakdown for you to see that exactly what we just use the top 3 for each one. And then they got the top 10 holdings. So right now for SCHD, Verizon, Amgen, and Broadcom are the top 3 holdings out of the top 10. Look at that, PepsiCo still in there. I love it. Got a lot of exposure to PepsiCo. Dividend stats, whatever. You this is all self-explanatory. You guys are grown adults. I don't need to go ahead and read everything for you. But that is that. And then to finish up this spreadsheet, that again, it's free. You can get it for yourself. I put not only the number 1, 2, and 3 sectors and their current weightings as of this recording, but also the stocks. Some of them had things like bond funds and whatnot, but the number 1, 2, and 3 stock in those portfolios are also listed there as well for your viewing and considering pleasure as well. So from what I can tell, SCHD still stands pretty much head and shoulders above most of the rest, but the Vanguard like VYM, and I think Lanny from Dividend Diplomats buys either I think he buys VYM every week, a substantial amount. So VYM is probably a close number 2, and then VIG looks really fantastic as well. And the oldest one is a mutual fund, the BlackRock Equity Dividend Fund from 1988. That was the oldest one on our list. So there you go. What do you think of all that? What's your favorite ETF? What's your favorite fund? Again, this is according to Morningstar, what they think. And then if you want that article when you're on the spreadsheet, it's linked right there for your convenience as well. So SCHD, still the one that I'm building out into the Roth portfolio, and we can talk to you now. So yeah, great. Okay, sounds great. It's right. It sounds great and looks great until I had to restart Chrome because I'm using that because it's just I know I'm on a MacBook and I'm not using Safari. Do you know what, dude? That's correct. Apple did have an update, so that must be the problem. So, hey, lesson learned. Nothing like learning it on the fly when we go live. And I'm like, hey, look at this, everybody. I want to show you. And then you're looking at a black screen. So that's what you get. All right. I'm just going to say good evening. Hello to you all. Love it. I love this little group we have in our own little corner of the internet here where we can meet and hang out. How far am I on the snowball? Oh, you're on snowball. You're on 504. I am about page 300. I had a crazy busy week. And if you notice, I didn't put out a video this week because I've worked late 2 nights, had bowling, it was just every night was something. My oldest is in volleyball and my youngest is bowling now. And apparently I asked her to ask the coach if he'd let her try to bowl overhand, and I guess you can't bowl overhand. So a little bit of a bummer, but yeah, you're probably got more time than I do on your hands, Jim, which I envy you. So I've been reading it, enjoying it. And honestly, when I'm reading a book this good, I'm in no hurry to get it done. And as long as nobody wants it at the library I got it from, I'm good for like a couple months before they're going to want that mamma jamma back. But it is a fantastic one. Oh, dude, and you're buying TGIF. That is an ETF that pays dividends every Friday, right, Jim? I'm going to get back. I'm going to try and get caught up here because I don't want to ask you a question and then it's like 20 minutes later I get to your answer. So I guess these are yours then, John. Yeah, VOIM, SCHD, all the usual suspects. Pretty cool. Good ones. Yeah, low expense ratios. Good catch. I think that is such key. And does anybody remember the study that was done where they showed like a 1% expense ratio compounded over so many years on like I don't know, $500,000 portfolio, and it just, or $1 million portfolio after like 20 years or 30 years, it ends up being, hundreds of thousands of dollars when you have a 1% expense ratio. Ray, I don't know what F meant. What's F? Let me know, Ray. Yeah, Steve, what's up, man? SCHD, VYMI, and VOO. Was VYMI on my list? I don't know. VYM. Oh, VYMI. Hey, I bet that I stands for international, right? DFW, Dallas Fort Worth. Sweet. Michael's in H-Town. Oh, I missed one. Somebody said you're a neighbor of mine up there in Michigan. That's right. We got Kentucky in the house from Pap. What's up, Kentucky? You guys got all the bourbon down there. You're hoarding it all. Zombie apocalypse comes. I'm heading down to you guys. We're gonna ride it out in a haze of bourbon, in a bourbon fog, right? Uh, Mark, North Carolina. Beautiful. All right, we talked to that. Yeah, Patty, you know me with making fun of the Upers, the UP. If anybody doesn't know, you're foreign or whatever in the Upper Peninsula of Michigan, yeah, hey there, right? The Upers, Uper, Upper Michiganer. It's not a word, dude. Had my Christmas party at work. Have any of you have any of you peeps out there that work for a business had your Christmas parties? Yeah, I think you're right. I don't know if Admiral Farragut did actually say that. I think because you said he's accredited, but I don't know if he said that. There's some interesting. Could ETF be a bubble? It depends what the ETF is. Remember, not all ETFs are the same. It depends on what the underlying is, and it just depends. Like if it's all tech focused, then I would say yeah, that could be a bubble. Or if it's all AI, like there's AI ETFs, that I would say is definitely bubble. It's bubbly. It's not the PepsiCo bubbly. It's bubblish. It's bubbling up. But is that bubble going to pop? That's what we want to know. And we want to know if Pap can tell us if the bubble's going to pop. But yeah, I don't know. I stay away from that. And honestly, the only way I would play the chip space right now. Oh, what was that news that dropped this week? Huawei has like a 7 nanometer chip, and I guess we didn't think they could do that with the technology they have. So they are like at least as good, if not better, than a lot of the. Sorry, I just caught my kid. Or somebody put this guy here. This elf in the shelf. I can't. It's you try to do this. Move your hand. Look in the screen here and move your hand in reverse. So yeah. Elf on the shelf there. But what were we saying? Oh, semiconductors. Yeah, Huawei. That industry moves so freaking quick. And it's like Buffett and Munger, God rest his soul. I guess I'll say that. They don't know. Like, there you go. Huawei could just come out with a 3 nanometer chip and just blows the world away. And all of a sudden, everybody's taking a hit to their bottom line. So, oh boy. What was this? Shamir and KC. Who's breakfast cereal review? KC still is around and kicking. Just this, how can I put it? Like the whole just strictly dividend things, I guess, isn't her jam. I don't know. She's busy, but yeah, she still emailed. We still email once every couple weeks or so about things we're invested in, things that are news and whatnot. But yeah, she's still around. Shamir, I think I saw him pop up on Twitter. I think he was in here a minute, but yeah, Jeppy. That's one that my buddy Harris loves. He said he's just buying it for income, not really expecting much capital appreciation. Are you serious about that? People really do cereal reviews, huh? I don't know. I don't think I'm going to start doing cereal reviews. What is that? I haven't even been drinking. What the hell is that bubble? Did you guys see that? That's bizarre. I just saw a bubble. Either I'm hallucinating and I'm about to pass out, or maybe I got like a radon leak here or something. You know, there's mold in the air, but it looked there was a bubble on my screen, like a thumbs up. I don't know what that was. That was weird. I've never seen that before, but yeah, it freaked me out. I was like, what the hell is that? So, anyway, Cosmics. I drove by Cosmics today. I don't know if I can pull it up. Do you guys know what Cosmics is? I want to show you this. I know I get on these. There's so much I want to talk to you guys about and share, but CB, here it is. Okay. All right. Watch the, I'm going to bring you guys with me. You know, I'm going to bring you with, I'll get caught up and then we'll do dividend news. So stick around for a minute. If you can do dividend news, but let me share this with you. I'm going to hide your comment. I'll answer this. My bowling average, I don't know. Awful. Last time I bowled was years ago, way before pre-COVID. But here we go. Check this out. If you don't know, so here in, um, yeah, here is the McDonald's is opening a joint called Cosmics, and they opened the first one here in Bolingbrook, Illinois. I drove by it today, and I thought they had a picture of the thing. That's what it looks like. I don't know if I can blow this up. We don't need to see that. There we go. That right there. So that's what it looks like. We drove by this one. It is they're doing it to compete with the demand for the afternoon beverage pick me up occasion. That's what their that's what their Polak CEO Chris Kapczynski said, and I can say that because I'm a Polak. Okay, I know I have a German last name. It's my stepdad's. It's like a bad tattoo I have. Stuck with it. But look at this stuff. Like it's blurry a little bit, but churro, s'mores cold brew, churro frap, sour cherry energy burst. So they're gonna do stuff like that, like mixed drinks, like making you these concoctions like blueberry ginger boost, because they can't do that in the restaurant. And then they're gonna have food too, like caramel fudge brownie, the twist cone that's there, and then this. It's blurry. It's not your eyes. Don't worry. Creamy avocado tomatillo sandwich and the spicy queso sandwich. So pretzel bites, things like that, like snack food and mixed drinks. And they're going to be opening 10 of these additionally in Texas in 2024. We'll get a shot of their wonderful crew here. Nobody's wearing hairnuts, I see. Hopefully this was just like a training thing. But yeah, one dude waited 3 hours to get a frap. Dude, the police were guiding traffic. It was blocked up in this. It was nuts. My wife's like, why would you wait that long for that? But the last thing I was going to say is that they're going to analyze this data for, yeah, there it is. Long lines, idiots, morons. Sorry. Somebody's probably like, hey, I just was there today, Russ. I don't know where it is. They're gonna take a year and analyze the data from these 11 restaurants, but that's Cosmic. So it's crazy. Everybody was there. I posted a picture on Twitter as we drove by. Here's me like driving by, like trying to keep my eyes on the road and take that old picture there. So any cheap real estate hedge funds, and if so, what are the names of them? Hedge funds. I don't know. Maybe like KKR would be a hedge fund, or is that just more of a private equity firm? Yeah, I don't know, man. Hedge funds really aren't my jam. I mean, does anybody that's in the chat know of any real estate hedge funds? Because I don't. Hey, Harsha, what's up? Good to see you. Yeah, Jeppy's lost principal over a year, and you can't go wrong with the combo ETFs. Yeah, I think so. I'm comfortable at SCHD right now. I know I get international exposure from the businesses that have business overseas. A lot of nice ones there. Oh, KNG. That's not the King one, right? KNGS. That's the one I did a video on. Anybody buy the Dividend Kings ETF? Yes, there he is. So we answered him. Every Friday, TGIF pays a dividend. I don't really know what. Let's look. I'm going to see Mr. Jim. I'm going to see Mr. Jim. What's in this TGIF right quick? I want to see the top holdings. It's from SoFi. So SoFi is competing with, I don't know who the first weekly, WKLY. I don't remember who that was, but yeah, let's see, up 2% over the last year. That's fairly new, right? Yeah. So it came out October 2nd, 2020. Let's see. I just want to see what's in it. Hey, Brad Thomas, our friend Brad Thomas. He's got a buy on TGIF. Interesting. They're going to tell me. Oh, that's interesting. So corporate bonds. I don't think they have many. Yeah, they don't really have many equities. So they're deriving it mostly from bonds. Ford, yeah, that's a Ford bond, or yeah, all of these. Next era. Very, very interesting. 3.5. When you see this, that's the bond, 3.5%. Wow, I don't really see any. So that's interesting. Interesting. I don't think they have any stocks, right, Jim? Yeah, the fund invests in debt securities. Well, hey, if the business goes out of business, they're going to still have claim on something instead of losing it all with an equity. But here, 3-year total return 6%. That's pretty interesting, Jim. I didn't know that. That's an interesting wrinkle. So it is mostly 93% corporate debt. All right. And looks like a 0.07% expense ratio, which last thing I'll look, because weekly, let's see, since I talked about it, see, we never know where this is going to go. This is why it makes this so fun. Weeklies, let's see. Oh, and Brad Thomas, there he is. He also gave a buy to weekly, so he must have been on a weekly dividend kick. Total return 3.5%, 4% over the last year. Yeah, so this is all stocks though, so that's the difference. So there you go. Financials, JP Morgan, Exxon, Broadcom, J&J, and see, there you go. There's the difference. 0.74% expense ratio. That is pretty high, and a 2.8% dividend yield, where TGIF was 0.07 and a 3% dividend yield. Wow. So honestly, if I was buying this for an income play, yeah, I mean, you're probably not going to get the price fluctuation if you're okay with that, but not bad, man. That's an interesting pick. Does anybody else other than Jim, raise your hand, own TGIF? Okay, cool. Well, we figured out what TGIF is all about, right? Yeah, G-Man, you're in Chicago. Charles talked about the Queen calling him. I think that might be code, or it's code for bed. I don't know. Kentucky has more barrels of bourbon than human population, and I think New York, though, also in that same vein, has more bankers than banks. That's a pretty good. Well, there it is. We're all going to go down there. Ignore the Queen. She's busy. This mutual fund, I've never even heard of V1X. I don't know what that is. Hey, Kevin. What's up, Kevin? We got to talk again soon, man. I saw you on your last Monday live stream. I didn't get a chance to pop on. Yeah, Journeyman, SCHD, and VIG. It is, dude. It is. It's totally a ripoff of Starbucks, and they've said they're trying to compete and gain market share from Starbucks and Dunkin' Donuts. Well, they will be. This one out here with the people that don't wear hairnets in Bolingbrook, which could be scary, is maybe they don't have to. I don't know what the deal is. I haven't worked in fast food since I was a cashier at White Castle in 1993, long time ago. But yeah, it is a ripoff, and we'll see what the data tells them. And like I said, they're going to take 1 year to review it and see. Subliminal thumbs up. I don't know if that was a Mac thing or if that's like a new StreamYard feature or if that was on the video, but from what I see of myself here, it was like a bubble coming from my head with a thumbs up. I've never seen that, but yeah. Let's look at DIVG. It's another new ETF, 3.93% yield with 14% CAGR. Wow. Well, let's take a old look-see here, real quick. Derek, let me share. Hide your comment. I'm almost caught up to all your comments, by the way, but let me see. DIVG, right? DIVG. Let's just see what's good old Seeking Alpha has to say. DIVG. The Invesco S&P 500 High Dividend Growers ETF. Just read everything like that. Oh, it is. It's brand spanking new. 0.39% expense ratio. Okay. I don't know if they're going to have too much data on this then, because it is super duper new. Top holding Altria, 2.25%. Walgreens, Crown Castle, Kinder Morgan, AES. Extra Space, we got them. They've been rising nicely. Alexandria, that may be the best of the best for office REITs. And Target. All right, well, 102 total holdings. That's about the same amount as SCHD has. Yeah, this is so brand new. We'd have to really dig into it, but what does it seek? Generally will invest at least 90% of its total assets in the securities that comprise the underlying index of the S&P 500 High Dividend Growth Index. Okay, well, they're going to track an index, so that's an interesting one I don't really know too much about. Fantastic. We got to do news. There's a lot of dividend news. So if you guys are ready, we're 30 minutes in. What precise good timing halfway through. Let me get caught up to you guys here, McStarbucks. And yeah, it's funny, John. There you go. He just said the expense ratio is a little bit too high. I think so. I think I just would rather go with VIG, VYM, SCHD. Hey, Blaze. Look at this guy smoking the stogies. Nice patty going. How long you been seriously investing to achieve this? Yeah, so I'll go over it too. I'll do this since we'll be on Simply Safe Dividends, but I have been seriously dividend investing since the late fall of 2018 is when it really started picking up, and I really started watching like Ian Lopic and finding a lot of the other dividend investors, and just like I said, I went down a rabbit hole and Alice meet hole, and I never came up. Who's Alice and what is this hole? But I needed a better way because I was trying to do one day I remember I was like, you know what? I bet I could figure out. I'm a smart guy. I'm going to learn how to make a killing in the stock market. And of course, just started with penny stocks and then graduated. When that didn't work out and I was losing sleep, I graduated to swing trading. And it was during swing trading that I was involved with NEO and losing sleep. And I've told this story before a million times. A couple nights waking up at 4 a.m. to look at pre-market, going to bed late, waking up early, is tired on the job. And I remember thinking like there's got to be a better way. But one night I was laying in bed and thinking of my grandfather who had invested, and he couple times, he wasn't crazy hardcore, but I remember him saying once that he invested in Walmart because they had good dividends. And, that popped in my head. I was like, what was my grandpa talking about? What's dividends? And just Googled it, and that's the Google rabbit hole on dividends. And here I am all these years later talking to you. So making mistakes, not as many as before, but we'll always make mistakes. So, anyway, to finish your point there, how much do I invest? So I've dialed back a little bit because we've been paying off some bills. We've had some medical bills, and I bought this laptop, this MacBook. I've been paying off a few outstanding things. So I haven't really been buying much. I've been letting the dividends do the heavy lifting, a little bit here or there. We do contribute to our kids' custodial accounts, $10 a week for each one. I have 2 kids, so $20 a week there. We put money away for their college in a 529 plan. And just, their savings account. We got money all over the place. So it's, as of right now, not a lot, but I usually try to do, if it had my way, about 150 to 200 a week is what I'd like to do and that's after our pre-tax 401k investment, which we do max out at that, 21,500. I think next year it'll be 22,500 that goes. So I'll show real quick we'll see the patty. I don't remember what it's at right now, but it dropped. Remember, because I sold out of Intel, I sold Target, and what else did I sell? A few other small things, ancillary positions. So I still have a bit of cash because I wanted to put it all into J&J. I just didn't expect it to run up. But SCHY, the international sister, raised the dividend 18%. That is stout. That is stout. Is it really 0.59? John, I thought the TGIF was, oh, it is 0.59. What were we looking at? 0.07. Oh, Christ. You guys want to see what I did here? I'm going to I'm going to show you what I did here cuz Papa made a boo-boo here. I'm going to show you what I did cuz here we go, real quick. This, ladies and gents. So here we go. We're on SoFi, and I neglected to look right here where it says expense ratio of 0.59%. So John, you are right. But as I was scrolling, I didn't read where it says peers. So they're showing you some of the similar ones. So the VCSCX, the Vanguard Short-Term Corporate Bond Index Fund, has a 0.07. And there you go. There's weekly up there with 0.49. So, John, I stand corrected. You are correct. Good, sir. Good day to you. You get nothing. No, you get everything. You get the world, John. You know what, guys? There's an old saying that says the less you want, the more you have. I think there's some truth to that. Yeah, I was right. You guys were right. I was wrong. I stand corrected, unfortunately. I know, contrary to popular opinion, I am indeed not perfect. I am so sorry to shatter and burst your bubbles, everybody, but Rob Berger has talked about, well, I don't know Rob Berger. Who is this Rob Berger? I need to speak with him. Oh, by the way, SCHD Stan, for those of you that are on Twitter, I'll be talking with him again. He's going to tell us what he's been buying in addition to SCHD. So we'll get that. We'll get the scoop. That'll be coming out later in the week when Poppy gets it edited. Caleb. Hey, what's up, Caleb? So Leggett and Platt, good one, because this is one that has been coming up. I think it's going to keep coming up for a little bit, right? It's been gaining. My cost basis is $34. So, what happened? Why did I freeze? Oh my God, it scared me. Well, that's what happens, right? I don't know. Got gremlins in the machine. So, all right, let's do this. Let's go to, so this has been one, right? This has been one for the record books. We're going to do dividend news. I at least want to get that out to you. So let me share this all with you. Here we go. We got dividend news. Oh, where am I in the middle of it? There, fourth. Wait. Sorry, I'm just getting caught to where we were. So let me make this a little bit bigger for those of you on mobile and not watching on 55, 65, 75-inch televisions. All right, here we go. So there it is. The office REIT, Alexandria, ticker ARE, raised that dividend 2.4%. We're going to go quick. We got a lot of these. So for those of you watching, replay or not, pause the video if you want to read the little blurb that Simply Safe has here about these. So Alexandria raised their dividend. CVS, did you catch it? Did you invest in CVS? Raised their dividend 10%, which is 27 years of uninterrupted dividends. Yeah, 3.5% yield. So not bad, not too shabby. Stryker. Does anybody remember Strider? I thought it was Striker. Strider was a game for Sega Genesis. This will date me. Back in the early 90s, I used to play. Fun game. Grew their dividend 6.7%. Yes, I am a little bit on the older side. Well, it depends. Anyway, there's Stryker. Raised their dividends 6 point. That's their 32nd year of raising dividends. MasterCard, good old MasterCard, raised that dividend 16%, which is their 12th consecutive annual increase. Small yield, though, so if you want to get those yields big, you got to just get in and hold and hold and hold. Just hold for many, many years. Or just buy TSLY, and you'll be right up there right away at 50% yield or something. Danaher, which is a life science tool and service business, lowered their dividend because they spun off something called Veralto. I know nothing about this. They refreshed their outlook on Scotiabank, which has about a 7% yield. But I think that the issue with Scotiabank, right, wasn't that the one that is tied to a lot of mortgages in Canada and the mortgage rates reset every 5 years or they fluctuate? Something going on. I'm not Canadian. I don't pretend to be Canadian, but Shamir would have been nice on that. Bristol Myers raised that dividend 5.3%. So that dividend yield is pretty sky high above the 5-year average. And they have paid uninterrupted dividends since 1970. So way to go, BMY. Carrier, they were spun out of Raytheon. They raised their dividend 2.7%, which is their fourth increase since they became an independent company in 2020. They've been around for a long time. I think they're pushing 100 years old being a company, I think. Eastman, ticker EMN, raised that dividend 2.5%. I don't invest in them, but hey, almost 4% for a chemical company. Tyson, they downgraded. There you go. I know a lot of you have Tyson. They downgraded Tyson from 90 to 80. So I think that's the low end of the safe bucket on there. And they say that they have pressures from shrinking cattle supply. So has anybody been buying Tyson confidently? Ecolab raised their dividend 7.5% for their 32nd straight year of raises. We're getting there. I told you there was a lot. Broadcom, big ups to Broadcom, 14% dividend hike. So not bad. It's now below because they've been going up. They get swept up with those chips. UHT, Universal Health REIT, 38th straight year of growth. And it looks like they raised that dividend twice a year. So almost a 7% yield for UHT. And there it is. WP Carey, they lowered their dividend 20%. We saw this coming because they spun off their office properties. So that dividend got lowered, but 5.5% yield currently. Cube Smart raised that. I love that. I used to draw this design in school. Like this was the only 3D thing I could ever draw is that box. So I was drawing their logo. Like who knew? 1990s. 4.1%. They raised their dividend, which is their 14th straight annual increase. Pharmaceutical company Zoetis raised their dividend 15%, which is their 10th year. Pretty interesting there. I don't invest in them or know much about them. There you go. Pat, talk about Michigan DTE. Do you know Michigan DTE? They anyway, I was just trying to read this and talk, but 7.1%. They raised their dividend. So that's interesting. So they became a pure play utility in 2021. I wonder what they did before. I don't know. And then I told you there was a lot. We're almost there. They reaffirmed BAT, British American Tobacco, as a borderline safe dividend. Eli Lilly, because they got Monjaro. So what happens? What do we say when the share price drops, the yield pops, but when the share price goes high, that yield's going to die. I just kind of made that up, but anyway, we'll work on it. The yield, is way below because the share price, it's almost an accidentally low yield, right? Because the share price has been going up and up from the blockbuster weight loss drugs. So the share price is the dividend yield has come down at the same time, but headquartered in Indianapolis. What's up? And then last but not least, they refreshed their outlook on Phillips 66, ticker PSX. And you wanted to know about Leggett and Platt. So I will go here to my portfolio. We'll kill two birds with one stone. The current yield on cost is 5.02. The Patty, if you guys follow the newsletter, is like right around 6K, I think. I don't want to pull up they don't show it on here. I don't believe. Their income calendar year ahead. There we go. So right now they're projecting $6,890 in confirmed, plus 41 in confirmed. Oh, maybe this was this year, I guess. I don't know. Here's the year ahead, maybe, right? It said year ahead. Yeah, like 6.9K. So we've been building this for a while. Like I said, you can build it faster when you don't have a lot of debt. So that definitely helps. But let's pull up Leggett and Platt here. This is, yeah, I like Simply Safe. January, it's coming up, $399. It'll cost me to renew it for a year. I think I'll do it just because I share it on the channel and you guys watch and they get ad revenue. So it pays for itself. And then we can all, I'll utilize it somewhat. But what were we doing? Oh, Leggett and Platt. Where are you? Probably in alphabetical order with the L, which apparently, everybody, breaking news, the L's are after J, but before M. So there you go. Leggett and Platt. So we're down 25%. We got a ways to go so we can come back up. But there's a few things that I think they're going to be okay. There's a lot of people getting old. I think we're going to need a lot of beds. If I'm going by anything, remember, you can always pause this. That dividend growth is slowed quite a bit. 6% 20-year CAGR. They're a dividend king. They've been growing that dividend for 51 years. But let's see. Oh, yeah. Look at this. December 14th, they go ex-dividend. I think I put them in the newsletter. So there you go. If you want to get in on that next dividend, which they take almost a month to pay, you can do it. You can do it. Yeah, the yield is 67% above the 5-year average of 4.22%. So the free cash flow payout ratio was a concern. It was at 137%. Their free cash was drying up. It's come down to 69, and it's supposed to be at 52, or it is 52 the last 12 months. They don't have a projection for the next 12. But yeah, I think the dividend it's okay. It's not going anywhere. They're just probably going to grow it slowly. Free cash flow per share has climbed, but yeah, 21, it just really, they didn't have enough to cover the dividend, right? Because the dividend is $1.84. So we have to have at least $1.84 of free cash flow per share, which, we have all these years except for 21. So it didn't cover it in 21. And their sales growth has been down the last 12 months, but yeah, they don't really buy back shares all that much. It's been kind of flat. Total sales, slowly going up. If you don't know what Leggett and Platt does, they make like mattresses and like, just think of like bedding. They do flooring, carpeting, wood flooring, things like that. Really fantastic return on equity and return on invested capital, which has been compressing lately, but you always want to look for a really high return on equity and return on invested capital. It means management is doing something right with the money that they're keeping and growing the business and growing our share of the pie. So yeah, you want to see, I think, mid-teens and higher for something that's great, but repeated like year after year after year means it's not a fluke, that it's not just a one-off or something like that. And I think they had a bit of debt, 54% net debt to capital, not too bad. And the net debt to EBITDA, it would take currently just over 3 years of earnings before interest, taxes, depreciation, and amortization to pay off all of the debt. And Simply Safe wants to see, it's just their metric below 3, and lowish ICR. So anyway, I didn't know we really mean to turn this into a long thing on Leggett and Platt, but it's a super boring company. Super boring. I think they have a picture here of what they do. Anybody out there invest in Leggett and Platt? And there we go. So there's what they do. Pause the video, whatever, zoom in. They make car cushions, chairs, flooring. I can't tell what that is. Gas something. I can't read it. Hold on. Sorry. Geo components. Everybody. There we go. Now it's blown up nice and big. Hydraulic cylinders. So this is all the stuff, like just the most completely unsexy business that you know of. And there we go. Leggett and Platt. And now that everybody's leaving because they didn't want to come here to hear about Leggett and Platt, but sorry, everybody. I guess we got off on a tangent there. Good morning to you, Billy, but it's Daddy's bedtime here almost. There we go. If you were to buy 47, Andrew, your questions. Okay, if you were to buy 4,700 shares in all your stock dividend companies shares, let's say 20 companies. Do you think you'd make $1 million a month? Buddy, I I think people graduated college by answering a less intensive question, but honestly, I don't know. Does anyone want to take a shot at answering Andrew? I would definitely, probably, most likely say maybe that could be a case. So, yeah, good question though. Not rated. Wait, I don't know who did I ignore? Matt on Schwab. Well, I'm sorry, I missed that. I'm so sorry that I missed that. Like I was trying to get caught. It's never intentional, guys. I'm not ignoring you. If I might miss some things, like on my end here. Here, you want to see what this looks like? I'll show you. Watch this. This is what I see. I know most of you don't. Whatever. We're getting toward the end here, but entire screen. Gotta select that. So here, look at this. Look it off to the right here. This is what I see. Don't bother the stream section, but like when you guys comment, so I'm like trying to talk and answer and go through this. So if I ever miss something, it's not intentional. So right now you can see I'm looking for Matt's comment. But anyway, so now you guys see here, look, there you go. That's what I see. So, I'm looking at the comments like you guys do, but anyway. So I didn't see what Matt said. So yeah, I apologize, but I don't know why there's no rating. So I don't know, man. Sorry. Adding Hershey. Yeah, Hershey, solid, man. If I wasn't already high into like PepsiCo and the consumer defensive, yeah, I'd probably add more. I was looking at them. I was eyeballing them in the 180s. Oh, so you guys saw that. You guys saw the thumbs up bubble. Okay, good. I didn't know if it was just me. Stryker saved the movie Airplane. Dude, I haven't seen that in so long. Zoetis did a 15% raise. They did indeed. Do you invest in Zoetis? Expense ratio. No, it's good. I'm glad I was wrong. I mean, I'm not perfect. Oh, 3M. So it went. I haven't really been paying attention to it. I think when the market went up, it went up. But yeah, I made peace with just having my exposure to 3M inside of SCHD. Rob Berger. I don't know who he is. Interesting. Old, boring, practical folk. Those are the smart people, like not the hot money, the new money people. That's correct. Michael, Carrier, and Otis were both. Otis is a company I applied to when I got out of the Navy. They do elevators. Since I worked on elevators, I don't know what spun. I'm not spun. I've never taken any of that stuff that would make me spun. I know what you mean. Spun. All right. Okay, good. You guys are that. And yeah, you know what? My wife handles it. I handle just about everything, but she does the taxes. And so like this MacBook I bought, it's a business expense. So yeah, it is, but it's just like, it's expensive. Like you think like, man, like $400, but I look at it every day. I share it on the channel. I'm happy to share it with all you guys. Oh, by the way, oh my God, his name, the founder of Simply Safe is Brian Bollinger. He was on Ari Gutman. Ari got him. He said it took like 8 months to get him on, but Brian Bollinger was on with Ari Gutman and had a chance with him. I have not heard of Macy's going I would not be surprised with the stock price where it is, because I don't think they buy back shares, do they? Let me see real quick. I'm just going to look. Yeah, I feel like Macy's is dying though. They are at, let's see. What are they at? Their stock is so $4.77 billion mid cap. So call them about $5 billion. Here's something fun we'll do. We'll find out their enterprise value, but I got to bring you with me here. Let's see. We'll go to that. Yeah, so I was looking at Macy's right now. It's the $4.77 billion. So they're still rickety dividend, a little bit roller coastery. Looks like the American Eagle over there in Great America. But yeah, they cut, and yields about in line. Shares outstanding. So they've been buying back a little bit. They're not diluting. But if we look at their enterprise value for Macy's, risk of cutting the dividend, okie dokie. Okie dokie, smoky. No, I wanted to see the, I think it's on this front page. If we go all the way to the bottom, I know here we go. So the capital structure. So that's interesting. They have a market cap of 4.77 billion, right? Market cap is when you take the stock price, multiply it by the shares outstanding. That's the market cap. But the total debt is 6 billion. And then you back out the cash. So that leaves you with an enterprise value of 10.59, 10.6 billion. So roughly, if somebody wanted to take Macy's private right now, they would have to pony up about $10.5 billion to acquire that. So, and they might have to pay a premium on that. So it would probably be, 12 billion or so just to get the board to approve. And because nobody's going to sell it for what it's, trading at right there. Like stock, the shareholders and the board, they want more money. So I think it would be about $12 billion to get Macy's to go private. And I don't think that would be worth it. Do you? Dear dividend investing watcher, you watcher, we got a watcher. And that's interesting. Yeah, it was. Eco Patrol. Okay, you know what, Matt? You did ask I think you asked this last week, so I'm going to do this. You know what? Fast Eddie, she was on with me. We did a live stream last New Year's Eve, and I'm going to be putting out a poll soon. We just did like a hangout for an hour. We did a ask us anything within reason at my discretion. But yeah, she was on. She sat next to me and we answered questions. That was the last show of the year, and I want to do it again. So, hey, I'm going to put out a poll, a community poll in a while, and we'll see if there's enough people. If there's more yeses than nos, then I'll have her back on with me. So, yeah, I don't know. It may be a cigar, but okay. I don't want to forget about you, Matt. I don't want to forget. He's going to be singing Simple Minds. Don't you forget about me. That was Simple Minds, right? EC. Eco Patrol. Okay, here we go, Matt. For you, buddy. 5% dividend yield. Already, look at that. It's a roller coaster ride. But obviously, that's the industry. They are come on, work with me here. Integrated energy company. They have exploration. So they have E&P, exploration, production, transport, and logistics, refining. So it almost sounds like they are vertically integrated, which means they have all three facets of getting oil from the ground to the end user. I think had Bogota, Colombia. Well, you've got foreign risk there. There's your dividend stats. I mean, overall, looks a little bit meh. But let's see, April 25th. So they pay that dividend once a year, and there are foreign taxes on that. Yeah, I don't know if this is in the Colombian currency. They do pay a lot of special dividends. And let's see. Yeah, it's just all over. It's such a cyclical business. Like they have boom cycles, but they just keep the same shares. That's kind of good. 41 billion. 41 billion. My God, 41 billion shares. How much was this? Like a $4 stock? 12. Jeez Louise. All right, real quick here. Total sales. Still going up. Yeah, see, like this shows me like you don't want to see this with your return on equity and return on invested capital and margins. You don't want to see the jack-o'-lantern teeth up and down and up and down. So net debt, yeah, it goes up, it goes down, it goes up. Yeah, you know what, man? I don't know. It just wouldn't be for me, but yeah, they're unrated, so 25 billion large cap. I mean, I don't know. If you want to risk it, that's cool. That's cool if you want to risk it, but it would not be for me. I would just rather stick with Chevron or ExxonMobil, what I know. So that's oh, Arc House and Brigade Management trying to buy Macy's. Yeah, there you go, man. So that's quite a premium from let's see, what would that be real quick? So it was at what did we say? Like 14 bucks a share was Macy's? Did we have on there? So Macy's, let's see. I'm gonna find it out right now. So it's at 1739 and you said 21. So if we're at 1739, let's see what premium they want to pay. 1739 to 21. So they want to pay a 21% premium. Yeah. Do you guys think Macy's is worth a 21% premium? Yeah. Uh, John, Altria is just it's it's borderline safe. They give it a 55 borderline safe. The dividend's okay. I'll tell you my thought. We'll talk about it more next time, but um, yeah, it's going to be it's just a melting ice cube, I think, more than like anything else. But they're trying to shift. They're trying to get into the smokeless and heat not burn and all that of like IQOS and whatnot. But yeah, so yeah, the few of you that did swing by, swing by, swing. I love it. You guys are the best. We had the thumb bubble pop up. I don't know what that was. That was new for all of us. So hey, good on that. Good on you. Good on everybody for being here. I don't know. I'll see you next week. Hey, let me know in the comments. Respond to this if you ever. I don't know. I won't say. I was gonna say so. It'd be easier for me to just hop on and be like, okay, so what do you want to talk about now? But I like coming up with a topic. I think it's good to attract people that are scrolling and look for something that they can watch for a minute and then maybe hang out. So either way, I do love you guys, Jim, Pat, John, Andrew, uh, all you guys that made it. Thank you for spending your Sunday night with me, and get ready for the week ahead. We get more investing to do, and we get to see what happens next. So I love it. Thank you guys. I will talk to you in the next live stream and have communion with you on a Sunday night.